Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it the same UTC. A really big shout out to everybody watching our last show live of 2026 together. A really, really, really big shout out as well to everybody that watches this on recording. So how are we all doing? Close to the year coming up. We've obviously got the Bitcoin chart up on the screen. We're going to take a look and see what the expectations are as we head into 2027 out of 2026. So do say hello if you're down in the chats. We are going to make time today, as always, on a Wednesday to review some charts as well. So if you've got anything you want me to take a look at, we can chart it live together. Then please don't hesitate. So what are we looking at? Well, this time of year, for me personally, is actually a time that I take time to reflect, time to look back on what's gone on for the year. Obviously, review what's happened in my trading, what's happened in my personal life, my business life. Really take stock of things. And I know that I know a lot of people will kind of say that, yeah, you know, a year is just another date in the calendar. But if it is something that gives you inspiration to be better, to try different things, to be a better person, if you get that from that, then, you know, then good luck to you. For me, I look at it as a reset. I look at ways that I wanted to challenge myself in 2025 and how that panned out, and now how I want to, you know, take new challenges into 2026. And, you know, something really important when you're looking to kind of motivate yourself, or you're looking to kind of set goals and achieve them, is to really kind of lay out a roadmap to do that. Otherwise, you know, I think most people do, but certainly the case for me, you know, I find it very, very easy to get distracted along that journey. And especially in this industry where, you know, for all the bad reputation and that it gets, there's some truly wonderful people, some wonderful projects throughout this space, you know, crypto being the Wild West that it is in the digital world. And, you know, for people that maybe don't know, I'm a huge lover, trader, and have been part of traditional markets for even longer than cryptocurrency. So no matter where you sit on that, it's just, I think there's a great brotherhood, a great sisterhood of people that are just trying to beat the odds in these spaces. And I think it brings together a lot of very interesting people. And it's been a real pleasure to be here with some of you, looking back across the stats for the year. You know, 2025, the biggest show for me was, I think, 1,800 people watched me. And that was a huge, huge moment last year. And then this year, I think it was 14,500, which was, you know, mind blowing really when you look at it. So just want to say a really big heartfelt thank you to everybody at the Birb Nest, to Crypto Birb, to all of my amazing team. You know, I've got such wonderful people I've worked with there. Most of whom are still with us, others that have moved on to other things. And yeah, it's just been amazing. But obviously to all of you guys as well. And I see Jojo there in the chat, our wonderful Jojo, who spans both realms. Hi everyone, hope everyone's keeping well. Yeah, the same to you, Jojo, as well. And how are we going? I'm doing well, Jojo. Actually, just kind of as I was saying, it's kind of a time of year that I do tend to take a little bit of time for myself. Markets tend to quieten down, and that over Christmas as well. And it's a habit that I built in my previous businesses too, you know, with one being so kind of property and construction based. Everything shuts down around Christmas. Everything in finance shuts down around Christmas. So it really is just a magical time of year. I'm a huge, huge child when it comes to Christmas as well. So, you know, I absolutely am mad for it. So I had a great Christmas. Actually had quite a big Christmas with some, with my uncle and his partner, daughter, and their in-laws as well joining us, which was really, really nice. My mum is an incredible cook, so we've all eaten a bit too much, and I think there are still Christmas leftovers in my fridge. So I hope everyone's I hope you had a wonderful Christmas too, Jojo, and everybody else. It was a really, really cool, interesting year. It felt like it really, really flew by. But we will be having our Christmas review that will be coming out soon as well for TBN, which is awesome because that really captures, a lot of the real kind of heroes of the company, the trading team, and, not including myself, and I do my bit intraday. Haven't really contributed much to the swing calls over here this year, but I think, all the wonderful traders we have over there have been amazing this year, and the stats really back it up. The trading tank, who's been at TBN longer than I have, Just Pitt, who I still think is one of the most exceptional traders out there in the crypto space. Raz, for everything we do with Razoon, amazing, done amazing work on all the tech side, still managing to get some absolutely banger swing trades out there, and joined me for the live shows as well for the scalping, which was just quality. And then obviously, on the fundamental side as well, we've got KZM, who I really, really, really can't speak highly enough of from a fundamental side. But also, Trading Tank's a little bit of a sneaky one in there as well, because he's really got his finger on the pulse of on-chain as well. And then the wonderful Taha. A lot of you guys might not have come across Taha, very much a legacy market trader, but just exceptional, really, really exceptional, and just the most humble person as well. And then obviously our wonderful crypto Birb. There's obviously tons that go on behind the scenes you guys don't see as well, for all the amazing support staff, all the amazing legals. We have this wonderful person called Crypto Tech who takes care of everybody back there as well. We've got the Anyas, the sister Birb, Lady Birb. We've had Inna, who's joined us recently. Very, very special, people and friends. You won't know our Tutus, and then we have, Edge Runner in there as well. Like all these people that are in there behind the scenes. Jojo as well, who's been with us for ages, really helping on the community side, and as well as other people that kind of come in and out. It's just been another really, really good year. Obviously a challenging year. Crypto's been in a pretty crazy space, so we're going to dive into the charts now and really take a look at some stuff. Cheeseburger Eddie, happy Christmas and wonderful new year to you too, my friend. What a brilliant name, Cheeseburger Eddie. And who else have we got here? There's a few other people say hi. Apologies if I've missed you or if your comments haven't come up. We had a slight issue with that this year with the streaming software. So who we got? Debilex, love it. Hello to you too. And Jojo, heading out to watch the fireworks on New Year's Eve in a bit, but figured I'd catch you before I head out. Wonderful. Yeah, obviously being right around the other side of the world, you guys will be celebrating rather sooner than later, but really do appreciate you diving in. Anyway, just wanted to kind of just take a look at the charts. Obviously, if you guys have got any requests, anything you really want me to take a look at, please do let me know and we'll make time for it. But we do have Bitcoin here on the daily. All right, just got the kind of key daily levels on here. We're actually going to remove these in a minute and really just kind of focus on this area here, because this, as we can see, since we had this large drop, started kind of around about mid-November, came down here and then kind of stepped into December. A lot of kind of initial promise that we were going to kind of get this bounce. I know this was certainly an area, this area here actually, that I was looking at, made a lot of videos, a lot of discussion topics about how we react to this area. We're basically either looking for this really aggressive recovery bounce here or to absolutely knife through it. Unfortunately, we did the latter. And then since, this whole area has been a bastion of support for the bears. But this here is the area, really, really, really interestingly. Ronnie Ripple, good morning, mate. I absolutely loved your logo there, my friend. And thank you. I will remember that. Unfortunately, not always, but I really do appreciate the sentiment, and I obviously appreciate you joining, mate. Great to have you with us. Now, this area for here for me is really, really interesting. Now, I kind of spoke about this a few times over the last year with people getting really, really kind of caught up in what has been, a really, really kind of quite choppy, quite messy year, right? And a lot of people kind of look at this and they say, it's just obvious. Price was just ranging up here. Then we kind of stepped into this trend, ranging again now. But, not always easy to see that live in real time, right? So let's turn these off for a moment. Just get left with a nice obnoxiously bright box. So one of the things that I find really, really helps, and I had a lot of questions about this, and I got back to as many people as I could over the Christmas period. I think actually I did manage to get through everybody. But there was kind of a question that really kept kind of coming up, and that's about where to trade from. People say, you're often speaking about where to take trades from, and I don't think, a lot of people asking me, is this an intraday thing and that? Like, absolutely not. I think for me, if you look at most markets, it's normally around about 5% of those markets are made up by retail traders, right? The rest are whatever you want to consider them as. You want to consider them as, institutional traders. People call them smart money, etc. I'm not really sure what I like the term for. I think you're just talking about professional, trading institutions, whether that's funds, whether that's banks, whether that's, big family offices, stuff like that. Sometimes it just helps to think of it as one mass entity, one mass super resourced, super smart entity, because, as we discuss with our students quite often, sometimes that helps with the visualization. You'll often hear this, and I've used these terms in the past as well, and I've made a point this year and last of correcting myself, saying, that the buy, there's more buyers than sellers that people kind of allude to. And it's a clean way to think about the market, but it's not actually true. For every buyer, there has to be a seller, and for every seller, there has to be a buyer, right? So what does this all mean? Well, it just means that there's key inflection points in the market where those decisions get made. And that's where I really want to know about. TGen Ape Society on HBAR, my PFP, love it, man. Absolutely love it. So look, if you think about it like this, ultimately, whatever you use to trade the markets, the really overarching thing is that basically it's volume, it's price, it's buyers, it's sellers, it's auction market theory. Okay. Don't forget that, because it's very, very easy to get caught up in anything. If you remove the tickers on these, basically what the charts are telling us are human psychology. And until you drive in with volume spread analysis and bits and pieces like that, these are the prints and basically the facts of what we have. So something that I think has helped a lot of people, it certainly helped me early in my career as well, is just identifying these areas. Okay, so as we can see here, here, for example, as well. Now, what you're looking at here are compressions, so consolidations, when the market is in balance, and what you're seeing between these areas are areas where the market is out of balance, all right, or expanding impulse moves, all right. So basically what's happened here is price is seeking new value, buyers are accumulating in here. We get the expansion, often incredibly quick and aggressive. And then you get kind of two options, really. Either this then gets accepted as a new area of balance. We don't know exactly where that's going to happen, but you can start to see by the candles. Excuse me, apologies for coughing, just wearing a little cheeky British summer cold. So let me just get rid of those for a moment. Right, you can start to see large-bodied, higher expansion candles. You can use obviously volume as well to back this up. And then you start to see the candles start to cross over. They start to compress, right? We have this initial compression, then we get the fake out, price steps back in the range. But ultimately, if you're looking at this as what it is, which is a range, and even if you're making an allowance to say, as the range kind of starts, you're thinking it's this kind of area here, fine, no problem. Right, then what happens? You get the fake out, price comes back into the range, no problem, where you still retain the same area. I think the mistake a lot of people make sometimes is kind of then saying, oh, okay, well, this now becomes the range. Well, no, what you want is you want the original information, right? Because this is the area that, ultimately the buyers took control of the market. So this is what really interests me, is then where they're positioning after this. So just because we've had this massive impulse up, I don't immediately think it's going to crash back down. I'm a little bit of a contrarian trader, have been kind of throughout my career, really. I've always found it easier to spot exhaustion than I have necessarily bottoms, even though there's strangely a little bit of a reverse with one another. But as we come into here, we deviate, we step back into the range. At no point do we drop out of this range. Whenever we set a range, you're basically, let's see what one of these we've got on today. Oh no, don't want to put a volume profile on. Here we go. Right, whenever you set a range, in terms of trading that range, yeah, once you've got confirmation. Now, a good way to spot confirmation from a range is seeing a strong move down. Then you really want a few key pivot points that you can add to, right? So 1, 2, 3. Once you've got those touch points, the market will give you a pretty decent indication of what it's going to do. Yeah, because, you know, if you come outside of the range, you step back in. We look at this and say, okay, is this our deviation? I still always think of SC with that. And you want to just see that impulse back in here, some form of inefficiency. And then basically you're looking for a trade setup that returns to that. And then you look to it towards the midline or the point of control. All right, then you either take that and then trade it to the range higher. And then you basically do a reversal of that. If you then kind of step back in here, you then trade it down like so. And you trade that range until it breaks. And when it does break, you typically get this large expansion move, in this case lower. Then again, you don't need to see the perfect retest of this area. Or the retest might even happen back within the range if that's where the inefficiency exists. But it's then watching the continuation of that rejection, all right? You're placing yourself where the institutional money, the smart money, the major players that control these markets are moving the markets. And for me, that's the most important thing. Now, the difficulty of all of that is the amount of patience that it takes to stay aligned with your plan. And that's still something that I believe every trader struggles with. You know, I speak to, and I've got to know some of the most amazing traders in this space in my career. And most of them will tell you the same, staying disciplined. Okay, what was the biggest, what was the biggest challenge you faced this year? And that's, sticking to the trading plan, right? Making sure that you're trading when your edge is hot. And the reason I wanted to make this a bit more educational as well, by the way, guys, if you want to see some charts, let me know. I will make some time to run through everything, but just had so many questions about it. And ultimately, at the moment, it's just really a non-tradable asset for me at the moment, Bitcoin, all right? If we take Bitcoin, you take a look at ETH, all right? I mean, obviously, Aster's kind of just chilling down here after we had this breakdown, right? But again, look, even when we were looking at this, all the TA that we had here on Aster, ultimately, Aster was a large expansion, a consolidation, failed auction that then broke down. If we look at what we're talking about here, because this really does apply to many markets. I had a lot of messages last year, people saying kind of like, BC, really love the shows. This is all great, but, this is stuff that you're trading on the S&P 500 or the NASDAQ, right? Or ES, NQ, for example. Does this stuff work for crypto? The way that I'm looking at it is it's the psychology of how markets move and how major participants move markets. So I use the same techniques and methodology across all asset classes. Just I differ the time frame slightly, where I might look for a 5-minute expansion on something highly volatile, highly liquid, like the NASDAQ. Then I would use like a 15 or a 30-minute on crypto more often. Yeah, because of the amount of noise and the kind of more illiquid nature of the markets. So let's just save this as TA. Why not? Right. So let's get rid of this for a moment, and get rid of this as well. Yeah. So as we look at the chart, applying those same principles, what do we have? We had a large expansion here. All right. Now, I do like to use volume. You see me use it on the show too much, kind of started integrating it towards the end of this year. It's something that I didn't use a ton of years ago, in truth. I'm always very, very focused on kind of merging sort of fundamental and news drivers with technical analysis. And it's mostly technical analysis that I share, and it's pretty much that I teach. But I've been on a 2-year journey into volume spread analysis now, to the point that I really feel like, I've studied under some of the very best people, very, very fortunate to have done that. Razun was an incredible help on that. He's fantastic as well. Carmine Rosato as well, who I can't speak highly enough of. Fabio Valentini, people like that. If you just, when I really wanted to get into the heart and the core of it, I really want to study from the very, very best exponents of that. And I feel now it makes up such a big part of my trading. It's a very difficult thing to share live, but what I have done is I've invested very heavily in a lot of new tech that I'm going to get set up ready for the new year that will help kind of share these elements as well. But for now, I just want to focus. Another part of that reason is a lot of it is very, very expensive to access, or at least expensive enough to access that it takes it away from most people. And I don't ever want these shows to be uninclusive, but I will start to share more. Anyway, just to give some context around this. Now, I know if you're a real purist of volume, then you'll say TradingView's not the best for it, and it isn't necessarily, but ultimately it does still work. It just measures it in a slightly different way because of how it, tick volume and stuff like that. But I won't bore you with all those details, but we're going to use it for this because this is something hopefully everybody has access to, right? So if we're looking at the expansion leg here, then we want to go from the low to the high of the move. Now, this is a little bit of a tricky one here because on a scale like this, we have this being the high here, then we have a small consolidation and then price pushes up. So some people will take it to the whole leg. Other people will really want to know what is understood about this initial impulse move higher. Funnily enough, you see they're actually relatively similar areas. But I want to know what happens in this main expansion leg here that then sets the high. And basically what you'll notice is rather than kind of moving this across after a point of expansion, this is where really the major market participants have been. And obviously we've had the launch here, we had this massive pump. Now, what you'll notice on the left here are the volume gaps, or the low value nodes that align with the chart gaps. So for anybody that's been kind and patient enough to listen to me waffle on for all these times, you would have heard me speak about these gaps a lot, fair value gaps, right? Let's see. Working its magic all the way through here. Now, how long you kind of keep these gaps for once you kind of get filled here. But look, it wasn't until price really broke down out of this area here that obviously it's then moving down into these lower inefficiencies here. But as you can see by volume, there was literally, hardly any participation at all at these areas. Now, this is the point of control, the red line here. So this is where we look for our range, right? And ultimately, when price then kind of settles and we fail to then see those expansions and this range remains valid, this is where we look to become active. Now, you can refine these areas. So rather than having this huge gap here, right, we can look to kind of move these down and fit them in over here, right, with these areas of low volume. So for example, if I just zoom in on this, rather than having that huge box, you can see, and you could kind of make an allowance for this whole area really, down to probably about here. But if you were to draw in two separate boxes here in the kind of areas of low volume, we would see that actually, how precise the strike point on these were. And actually, even in terms of acting as support and resistance. But overall, what we want to now ascertain after we've seen this expansion, and this is, I think, where a lot of people, probably got a little bit overhurt, especially towards the latter parts of this year, is price stepping into the range. You kind of look at this and you think that's not really a very pretty range, is it? That's a little bit low to here. This is a little bit higher. If we look at our three kind of touch points, and again, not saying that's like a golden rule, but I'm saying it's a rule that people can certainly take from. That high might be a little bit higher from this, right? So this low, because it's higher than this, so it's not that clean. But I would say that by the time you have this touch point, these two areas here are pretty close to one another, and we've got a fixed base here. Price is still engaging, interacting with this, and something else you can do here as well. Again, not really being a massive fan of just having these kind of, because this is known as a value area low, value area high. This is what we're using to establish the volume part of the range, or the key areas to trade, but actually kind of including these volume shelves as well. Is certainly something that's helpful here. So we look at that one. Okay, and that's just looking here and saying, okay, look, there's a fair amount of volume transacted here. This could be an area that the buyers want to protect. Obviously, this is internal to our range. And again, here, this is where the kind of low volume starts to appear here, right? So again, price drawing to this area could reject. So this is maybe where we look for deviations. You could include this as the high of the range, all right? I prefer to kind of take this information because I want to see how price reacts. If we really kind of start cutting through it and disrespecting it, this volume shelf here could then act as support. All of this is stuff that we would do in a manual way as well. So I'm just going to show you that. So then we're in here and we're saying to ourselves, all right, that's how we've kind of ascertained our volume range here. And we look down to here. Price tries to sneak back into the range here, but ultimately this area then acted as really, really good resistance. So we've understood a couple of things. We've had the large expansion. We've managed to spot where price started to range in here. Price then breaks down out of this range. I'll show you how we kind of draw that in shortly. But then we meet in with the low of our expansion range, right? Our impulse move that comes higher. And the reason that this is important is if these are the major players that control this market, pushing, for higher prices, then these are the kind of areas that I want to see if they're going to protect that. Okay. Now, if we, save this here, we just save this as V for volume, right? Now, if we were looking at this without that information, the key thing I would be looking at here is what's capping the market. All right. Now, again, we see a high form, a low, and another high. Now, I'm a lot more confident that we've at least got, and it's not the cleanest, right? But I would definitely want to include this kind of information here, all right, as a high. And then in terms of looking at the low, if I haven't got something in terms of a range, I'm looking at the last consolidation, like I said before, that really led to a meaningful move. And how can you spot a meaningful move? Because it sounds like such a, a contrasting thing to say. I just look for these gaps, these inefficiencies, meaning that, the aggression from buyers through here moved incredibly quickly. There was a failure of order pairing here, or not a failure, but a lack of. Therefore, we get these thin, inefficient moves. The market likes to rebalance these quite often. But then if you look at the origin of that, so here's the gap, right? Where's the origin of that? It was this consolidation, right? That was the consolidation that led to that pump. So as I look at that through there, I'm saying, okay, well, this is the area of demand that I'm interested in. I mark these personally from the body high, to the wick low, unless it's an abnormal wick. And then I just include the body. And then that's kind of what I'm looking at there. So if we kind of establish these two different areas, you're saying, well, okay, actually, you're managing to kind of capture this range here. Now, the really interesting thing here is look at the expansion lower that closes below this area. And then if we look back to what I was talking about previously about the range trading principles, well, you either want to see expansion back into the range, you want to see expansion out of the range, right? And this expansion here is really interesting. We can then see this area forming as resistance. I mean, you can also obviously use volume on these kind of levels here as well. And then as you're looking here, you're saying, okay, where's our manual gap, for example, or fair value gap here? Okay, and then if you look down here to refine it a little bit more, again, looking at the low volume nodes, where was there a real lack of participation through here? All right, and then this is where we want to line this up. Probably around about to here. And look how we get that beautiful confluence there, right? So again, we're driving back into this. This is where buyers were, didn't regain, but basically, what's the word I'm looking for here? Compounded their control of the market. Consolidation drove prices higher. Price coming back down to here, what am I asking myself? I'm asking myself, are the buyers still in control of this area? They are. And we're looking at where sellers are in control. Now, we didn't draw this, obviously, until we had this information here as well. So if we hadn't had that information, then I would be marking the high. All right, that would be the key thing for me here, would be this high. Right, because that would be the information I had. I know there's liquidity resting there because obviously people shorted the market. The assumption is that the stops are above there before we use anything like we can use heat maps and bits and pieces as well, order book information to find out. But, ultimately, this is a good target. If the bulls want to drive this higher, then that's a key liquidity pool. Obviously, we then saw price breaking down from here. Yeah, so we've obviously got an area of supply here, demand to supply to demand, cuts through demand. And then we get this displacement move lower with the gaps. We then refine this gap down using volume, or you don't have to, you just keep it as a normal gap. And then this is where you're looking for your shorts. Why? Because we've had the displacement lower, rejection, price now moving away. Ultimately, whether you're using that or, whether you're using your volume, you see here, price steps out of the range, comes back in, volume shelf, then we break down here from this lower volume shelf into this area, And then again, same principle, into here, short, into here, short, right? Now we've got more information showing that we're getting supported from the lows. Even if we just drew a box again over the majority of the wicks, this one being a little bit too long, but I can see here this kind of covers in enough for me. But even if you did want to, ultimately make it a really clean rule for yourself and include all the lows of the wicks, again, we can see here, look at the close below this area, price coming into this and really, really struggling as it then moves lower. So just to kind of give thoughts on that, just because I get a lot of questions about this, and I think that sometimes people, do make this a little bit more complicated for themselves because there's so much noise out there, right? And I'm not saying follow these instructions and this is 100% the way you should trade. There are, strange saying, but there are many different ways to skin a cat ultimately. Trading comes down so heavily to conviction and having an understanding of the system that you're trading. And with those two things, they complement one another and remove a lot of elements of doubt. Right, so looking at that now, let's go back to Bitcoin and say, okay, BC, that's all wonderful, but what the hell is going on with Bitcoin at the moment? Well, if I'm looking at this here, it's quite clear to see that this was the last major expansion. So following those same principles, if I'm looking at this being the last major expansion, where were the sellers controlling the market here? Well, the sellers controlled the market here, right? And again, just as we saw when we were looking at it previously, we had a consolidation in here, yeah? A deviation, price lost the range here and then sold off, right? Again, if we were using volume for this and we're looking at this small consolidation here, this is where price dropped away. Price comes back down. Obviously, this is value area high here, which we're seeing the rejection. And again, we include the volume shelf on this here. If we're looking at this at the lows, you can see that clear expansion lower as well, all right, below these areas. So however you're using it, basically, we're taking those to the extremes. But also, again, if we're using that same principle of looking at the wicks here and saying, well, this is clearly where the absorption was happening. So buyers were quite happy to defend this. I mean, you draw that back to here as well. It doesn't quite, it depends where you kind of draw it from the bodies, but almost has relevance with this area here as well. You can take it back through here. And again, we can see support, 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 this beautiful inefficient move higher, the consolidation, the move higher, back to this area that controls the market, can't close below it. Yeah, see that here. The wicks are coming down, giving buyers the opportunity to step in, buyers giving the opportunity to set in. You have this large kind of larger range forming here where you're shorting the highs, and then again, expansion, consolidation, yeah. Then we see the expansion leg lower, this being a failed breakdown, yeah, of this consolidation. The auction was here, failed auction, but then if we look over here at this expansion move higher, yeah, price testing into these low volume nodes down here, obviously sat within our fair value gaps that we see here as well. So again, I'm saying you have to use volume. I think it's a really, really good way to refine very, very good systems, though, because it gives you a lot more information. So if we're looking at this, the consolidation, we see the breakdown. Just going to get rid of that for a moment and say to ourselves, okay, well, what's price done down here? Let's take this move lower. We can see the price is basically within this range. Now, this is obviously our expansion or our impulse leg, yeah, lower. So we see the violent move. This is obviously where the sellers are in control of that. This is where they continue to drive the market down. Now the market's in a state of consolidation and we're looking for the next move. So if we're looking again for the touch points down here, then I would focus on looking at something like this, 2, 3, again, holding into this area. Don't mind this so much because you've got the bottom of the bodies here. So the long wick down here, absorption steps back in here, or if you wanted to wait, then again, these two are very level here. So if we're looking at this in a kind of manual sense, right, and let me just get rid of this for a moment and say, okay, well, if we're going to draw this over so that we can kind of capture as many of the wicks, and I do like, by the way, to try and anchor to a body if possible. I don't like just drawing through random candles if I can help it. The wicks are telling me where absorption happened. Aggressive sellers, yeah, passive buyers here. So think of those as limit orders in the book. Think of that as some absolute monster account that's like, you know what, I just want to accumulate here because I really think this is a good price to accumulate Bitcoin. And ultimately, that's what these consolidations are. So I want to look for that absorption. So even if I anchor to the bottom here, yeah, and just drawing this forward, even just trying to get the most amount of these in. And this is a slightly abnormal wick here. You could draw it all the way to the bottom of that, but ultimately price found support here, here, and here, right? So that's forming up the range low. Now, if we do the same thing, looking at it from a manual perspective and say, okay, and I'm happy to include these wicks, by the way, because look, they don't really kind of go out above too much. If this was all the way up here, it's just going to give me too large of an area. And that's not just kind of making it up as you go along, by the way. There are subtleties and nuance to trading. But what you'll do is you'll then break that down on the lower time frames, right, to give yourself that vindication. So if I want to get all of these wicks in here, I'm going to draw it something like this. For me, this is a really interesting area, right? And actually, as we draw it back, we can see it comes to this consolidation, which was the very, very minor point of balance or, range before price then sold off again. So what we can see here is we basically got our range, right? And what do we do when we draw a range, right? Friend, he's become a friend over the last few years, and just a wonderful trader and human being, guy called Follis. Funny enough, I mentioned this in my Bitcoin report on Sunday. Is this wonderful saying that, as an excellent range trader as he is, yeah, here's our midline. Look how beautiful that is as a range as well. There's supported price through there and currently capping price here. He will say, don't diddle in the middle, right? And with his awesome accent, it sounds a lot better than mine. But it's very, very true. These aren't the areas that you're going to take high probability setups from. If, again, we go on here and just clean this up for a moment. Right? If we look at this again, where the good buying and the good selling has taken place. Yeah. Great trades happening in that area. And you sit there and be like, yeah, but you didn't know about the range to here, which is right. We didn't. So that's our kind of line in the sand. These don't count. But this does, and this does, right? And your first target's always the midline of the range. Or, if you're drawing it using volume, then you have it as the POC, okay, the point of control. And how I would draw that. Let's just save this as current range. This is where we started to consolidate, right? So we had the expansion leg down, which gave us our key areas of interest, right? Then we started to consolidate because, if using this here, I'm looking much more in terms of continuation, drawing a range in, focusing on the expansion leg lower. Yeah. Meaning that looking for these low volume nodes, yeah, like these, for example, to act as a point of rejection. Now, quite funny, isn't it? Or looking at the volume shelf here, for example, as support, how drawing these in here and here line up pretty well with our actual range, right? So again, just giving you that little extra bit of confirmation, right? So that can help form the range. Yeah, they're the areas that you're looking for. You're saying, okay, but I'm not really looking for it to range at this point because this is all the information I've got as it drops. What I'm looking for is where can it return to that I'm looking for confluence in terms of then being able to get short. But also, what points do I want to see violated? So let's say this volume shelf here, for example, price comes in and really has an aggressive break above this, yeah, value area high, and we see this aggressive breakout, little respect for the volume shelf up here, takes out the value area high, which is here. Well, then in this move higher, this expansion move, this is where we're looking for those inefficiencies, those gaps, those low volume nodes for price to draw back into and then for us to get our setups, okay? But when we have more information, we want to use it, all right? So let me see. We had brilliant setups from that. We can see price getting suppressed from this area here. But as we said, we start to notice that price is ranging, right? So we're now moving in to a state of being able to trade the range. And I want to anchor that to where the consolidation started. Again, we don't know that it's a range until here, so nothing before this would count. We just see price start to create this, and then we have that information. We want to apply that Bayesian methodology, right, which is where we're constantly taking on board new information, processing that information, all right, and then adding that in to our thesis. So as we start to move along, these are ranges that we adjust. Yeah, as we have new information coming in, you move the range along, and then you start to see these moves. Ultimately, we don't have any major expansions wherever we are in this, right? Remember, this is the place that we set the range. This is where we have our touch points. Yeah, we don't see any high energy moves higher or lower. When we step back into the range here, we want to step in, see if we get those gapping moves, and then we want to trade it lower. I would normally utilize a lower time frame to do this, by the way, so to look for these kind of expansion moves. And you want to see that aggression as we draw the range along. Again, we can see just trading highs to the mid to the lows, or lows to the mid, failed. Okay, so back down again to the lows. What do we do? Another trade from the lows up to the mid. And that's basically where we are at the moment if we draw this across. Price just starting to hold above the point of control here. Look at the volume that's kind of building up in this area. So this can be an interesting point here to see if we get that thrust higher. But ultimately, sorry, pop that back on. Look at all the volume we've got outside of here as well. It really doesn't start to thin out until, you know, beyond this point here. And at the lows, we start to see the low volume nodes here that are supporting price and this volume shelf. So again, you know, we can make an allowance for that. And we want to make an allowance for this as well up here. And I don't think we're going to be a million miles away from that current range. Yeah. So long story short, Bitcoin at the moment is ranging. I know that might be an around the houses way of saying it, but hopefully it kind of at least gave some insights in terms of what I'm looking for, because, you know, most traders would benefit massively. And if this isn't you, it's not you. I'm not trying to be a twat about this or to kind of, you know, but to ask yourselves, are you ranging or are you consolidating at the moment? You see a lot of people trying to really kind of, you know, long off of these lows and that, which is absolutely fine. If you know, if you're doing it from the right areas, you can get some pretty decent trades off of this, right? As long as you're able to secure your risk, you know, you're using repeatable strategy, etc. And again, I'm going to say again, managing your risk is just so important. So what's the playbook, right? Well, the playbook, whichever range we use, is this. I want to see price establishing itself above here, right? And we had this small consolidation here as well, so I'd really like to kind of see a move on that, but I want to see this, you know, high impulse move. I want to see something like this, right? Because then we're starting to ask a question of this area. This was the origin that led to that really aggressive breakdown, all right? This is where sellers really exerted control on the market. So how willing are they going to be to defend this area? Have they made all their money, stepped out? And I'm not being funny, you know, it's pretty hardcore hold if you know, if you're really, really in the green all the way down to here. Then price kind of starts to make a move back up to here. Ultimately, then what we're doing is we're taking this area and saying, okay, what's this area going to teach us now? We want to see the same kind of thing. Yeah, moves aggressively down below this area probably mean that we're not quite ready yet. Might be looking, maybe we didn't retest this in an early phase. Maybe we're coming back down here. You know, think of the market as this. When we're in balance, price has found acceptance. Ultimately, market participants are happy to transact at these levels at the moment. Let's call it between 93,272 to 84,841. In these kind of areas here, price is agreeable. So there's accumulation going on now. Our job as traders is to understand, you know, whether this is breaking out and people are willing to pay higher prices for this. You know, whether it's breaking down from this, right? You know, if we zoom out and we look across here, this is doing a great job, by the way, you know, how wonderfully aligned here, yeah, with our range low, or even if you take it all the way up to the wicks, or if you're somebody that just focuses just on the bodies, probably even more accurate, right? Below this, I think this is the really key thing for me here, coming down into these lows, right? Because I think if this consolidation here doesn't hold, yeah, and it's done so beautifully well here, then we face another opportunity here. If we get that aggressive move down here, then I would definitely be looking for returns to this area here to short it down. All right. And that's the playbook for me. And it's one that's going to be built around a lot of patience. We could easily see this grind continue. Does it mean that you can't trade this? Like, absolutely not. You can definitely trade this. You've got an absolutely beautiful range here, right? Remember, 1, 2, 3. From this point, this was our go point, right? This line here. So as we drive it down onto a lower time frame, say we're looking at this at something like the hourly. Yeah, rejection, price stepping back into the range here. We see rejection here. This one doesn't play out so well. The rejection that comes into here plays out well. This one's lovely, straight down to the midline. This one long off the lows, up to the midline, holding the mid, pushing towards the highs. Again, it looks fantastic to trade the POC here, by the way, or the midline. Not really something that's massively of interest to me. I want to be taking these trades from these kind of areas, right? And again, I want to see those moves back within the range, all right? Yeah, so large moves like this, you're coming back to these areas. We look at these gaps, these areas of low volume, right? Then this is what we can scalp. We can get in, we can get secured, look to build these positions intraday, right? If you get taken out, fine. Same principles, right? There's no major expansion above this. You want to see this really clear and obvious move. You can see price starting to get caught in here, right? Then you have that large move down, right? Price, again, coming back to revisit these areas. This was the origin of the breakdown. We also have some low volume in here that didn't get respected. But once again, large breakdown here. Didn't even really get much of a pullback on this one, right? But again, if you're following the rules, you're typically going to be on the right side of this more than you're not. Terra, hello, mate. The grind never stops. Thank you, my friend. Yeah, absolutely. Always helps doing something that you're massively passionate about as well, right? And then the same here from the lows, right? I mean, look at this move. Look how aggressive this move up was, yeah, from the lows here. This was a really aggressive move. Look at the displacement. Look at the gaps that form within these areas, yeah? And then you're looking in here, you've got slightly smaller gaps up here, which is fine. You've got these moving through here, but it literally tags, I think, perfectly the upper, just the top of this, or maybe kind of misses just a little bit. We're looking at this here and we're saying, okay, well, this was the real kind of key expansion leg up. I know people kind of have different ways of kind of drawing these. I really do kind of like to just capture that real initial pump from here. These are a bit abnormal, these wicks. But again, we look down here, point of control, beautiful spot for price to come into, you know, holding the low volume areas here. If you're somebody that would extend these across, like you would include this information up here. Just, I don't really like anchoring to these abnormal wicks here. You know, I like to see that immediate impetus, then price starts to range out a little bit here. So anyway, just how I kind of apply this after the studies that I've done for the last, well, deeper studies that I've done for the last couple of years now. So yeah, look for the clear and obvious, right? Even here on the breakdown, if you wanted to then short this move, you know, not that you would, because you'd be nuts to do it into resistance, right? But you do have an aggressive move down here. So what does that tell you? It tells you people were really aggressively pushing to get price lower. It's just getting absorbed here, yeah? Buyers are stepping in. You can use a CVD, right? A little bit, in my opinion, uses a bit better on the lower time frames, right? But looking for these divergences, right? Look at this low here, yeah? To this low here, pretty flat through here, where this is actually a much lower low in here, just showing us that the aggressive volume here, the cumulative volume delta, is showing us the aggression from the sellers here. And we're kind of seeing that in here as well, aggression from the sellers. But as we match it up on there, it's not really kind of going in as much, all right? Just showing us that little bit of absorption. Then we get the pop and then we can kind of move the other way. So if anybody has a chart you'd like me to spend a couple of minutes just looking at, please do let me know. If not, I will just take a look. Actually, something we should look at. We are on a new contract now, but you know, the S&P 500 as well as the Nasdaq. All right, you have to apologies here because there's going to be a lot of charting on these ones. But you know, as this heads into the new year, price is currently battling with this area here. All right, we take these wick highs, prior all-time highs. We can see how, and again, forgive all the annotations on there, hopefully you can see it clearly enough. You can see how we've had this large expansion move here, but again, excuse me, kind of faltering here, starting to kind of come back inside, looking like a deviation. I'm not actively looking to be short the S&P 500. I actually think there's probably quite a good year ahead in 2026. Depends on the fiscal stimulus. Depends, obviously, you've got a huge debt buyback in the US as well. It depends on a lot of geopolitical tensions and everything that's rising on those fronts as well. And deepest of sympathies to anybody that's caught up in any of that. Really kind of puts everything else into perspective. But purely from a market's perspective, you know, you'd have to be absolutely nuts to say that the S&P 500 doesn't look incredibly strong. Yes, we've kind of been in this range here, which we are at the highs of now. I think if we do step back within this area, definitely looking at the lows that are coming in about, what have we got here marked up on this low? The 7150, so 677,150 as an area for a reaction. And, you know, let's not forget we've still got this expansion. Would have liked to have seen this kind of come above the highs a little bit more so here. But ultimately, we do have this at the moment. We have the inefficiencies in here. That's why I think it's quite dangerous to short this. If we start to see these disrespected and just getting closed through, then I think we're pretty nailed on to come down to here. But I would definitely be looking for reactions around the kind of 6.9. Let's see when this actually starts here. Yeah, the kind of 6.913 and a quarter. Okay, around here as price starts to dip into this gap. This is where we're going to see if the buyers are interested. We've got New Year's Eve obviously coming through. Start of a brand new year kicking off tomorrow, and then we kind of get right into the end of the week on the Friday. So it's actually the following week I'm really kind of looking for that impetus to come into the market. Want to keep an eye on the Mag 7 as well. All right, for anybody that's not aware, that's, you know, Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. You can see them down here. These all have a major part to play. They're huge participants within the indices, within the indexes, right? It's been, you know, obviously keeping things like the S&P 500 and the NASDAQ so prosperous. All right, we can see here all looking pretty healthy. Probably Meta just starting to make a recovery in here, but we saw these massive moves up from the kind of middle of the year. Microsoft kind of coming into a little bit flat through here. Nvidia obviously just being the absolute monster. And again, just look at the chart, right? Look at the chart and ask yourself what's clear and obvious. Yeah, try and mark out these clear and obvious lows. Okay, where did the market find support, right? All the way through here. Yeah, where did the market find? We can see where we've done this previously. Obviously, I actively trade this, but, you know, where was the market finding support? And it did through here, right? Then where these areas started to turn to resistance, and look, we're back above this area here now. So we've got a plan. There's always a plan, right? You know, when you want to see these areas and you want to be a participant, just ask yourself what's clear and obvious. People are buying down here until you get a damn good reason to stop buying down there. Probably a good place to buy, right? If people are consistently selling this as they was as we're popping through here, probably a good place to sell until we got that pop, right? We got the pop above, and then we're saying, okay, do those buyers that had the strength to overwhelm the sellers here, to take control of the market, the aggressors took control here, are they still holding it? And that's what you ask yourself here. Again, we get the drop, the consolidation, we get the pop, and the market moves higher. All right. Hey, Mr. Brownbug, how are you doing, my friend? Gordon as well. Here's Savaloy from Bedford. How have you been, Gordon? Always good to see you, mate. You as well, Mr. Brownbug. Everything is flat. My tummy is not after Christmas. I love that. I don't think anyone is, man. Right at the beginning of the show, I was just explaining how they've still got some turkey the size of a rugby ball left in the fridge, as well as like lamb cutlets. Just been eating it for days and days. Even the Huskies looking tired of all of this. But yeah, complete agreement. The new year is going to be one of restraint, shall we say. Great. So what was that? SPX takeout liquidity? No. Well, very much. Yeah, Happy New Year to you too, Gordon. Everyone else as well. Yeah, so if we look at ES here, I'm just going to do this actually. And then just hope that I remember to get rid of all of these. Let's see if this gives us a slightly better view here. Just get rid of all of these. That's a bit better, isn't it? And we just got a low of day in there. Right, so in terms of this, what I'd be looking for here, mate, is we've got this quite clear high that it's trying to kind of take out. If we look at the wicks from these, right, this is the kind of area. And how I've done that is I've taken the high of that wick and anchored it to these bodies here, all right? So you can just take that out and just use your anchoring tool to do it as well. And then we can see we got resistance through here. This is obviously where we saw the sell-off. The sell-off, price came into this showing a nice bit of strength to kind of get above here. The tricky thing here is it's often, and obviously the markets, the last thing they're here to do is make our lives easy, but to see these big aggressive moves higher, either get a retest of this area, low volume node, a gap within this is nice and clean. What we haven't quite got here is that impetus. And it's no surprise, obviously, it's the festive period here, but we certainly did see buyers stepping in here. Yeah. We saw price have this rejection here. Again, look at the rejection, right? You can trade this lower, no problem with that. Right, but to understand where you're trading this into, right, again, look where the gaps are, look where the inefficiencies are. These are great places for repricing. And obviously, look at these highs as well. Look at the last high pre-break. Yeah, this is where the market shifted. It had gone from lower lows, lower highs. And the incredible Tom Dante, the greatest exponent in history of the C word, in my opinion, and one of the best traders, someone I learned an incredible amount from early in my career. He would probably slaughter me for this, but a lot of his kind of systems, he's an amazing bund trader, and something that he looks at these highs before the market gets broken and then looking to trade off of these highs when you return to them, right? So the market comes in. Now, he will use different methodology for this, and he's a much better exponent of it, one of the best out there. So definitely go and learn from people like that without a shadow of a doubt. Pijo, Happy New Year to you as well, my friend. But yeah, again, this is where volume can be helpful. All right, if we look at this, I'd probably say, yeah, from there to there, or if you're looking for the kind of expansion, you might prefer to draw it to here. All right, this kind of initial high to really capture this area. Either way, yeah, we've got an area of low volume here. You've got a very small low volume node here. Actually, this one here does an incredible job. But hang on a minute, because I would actually be taking it up to here. I think this is where you kind of price grinds up here, and then we get the small consolidation. But however you look at it, right, looking at these areas of low volume in here, overlaid with these gaps, these are the areas that we're looking for a reaction. So if you wanted to be short here, then it makes a lot of sense, right, to be looking on an intraday basis. Here's your point of control. Great. What do? You can look for an aggressive move back inside the range here. Let me just mark this up and I'll show you what I mean. Pijo, actually it's BC, but I really do appreciate you with the correction. It's not the wonderful crypto Birb, I am afraid, my friend. But yeah, so just to show you this here, but you would be absolutely correct. It's being broadcast through Adrian's channel. He is the head honcho here at TBM. This is what we want. Yeah. So you've got the range high in here. So we're looking here and we're saying, okay, when do we get that aggressive move back inside the range? Yeah. Might be somebody that uses a 4-hour chart for your confirmation. Might be somebody that's using the hourly. However we're looking at it, remember what we want to see. Aggression. Yeah. These will look different because we're on a slightly different time frame, but we're taking the high as it was drawn out on the daily. But look at this. Aggressive move. Shift structure. Remember? Just a key little element that we're looking for in here. And then if we draw out our gap, and even if we were to throw a cheeky little bit of volume on here as well, yeah, this is where the low volume exists through here. Lines up absolutely beautifully with this. You can even refine that back to there. And again, short here, this is the S&P 500, right? So these just mark the out of hours. This white section here is US market. Okay, so then beautiful short into the market here, short into the market here, short into the market here, short into the market here. We then reclaim this area that's been so potent. It gives us our first indication that that narrative is starting to shift. All right. So sometimes just drawing things in and keeping them simple can be the best thing. So please do reach out. Anyway, we've just reached kind of the end of the show. Please do reach out, guys. You can find me on Twitter, BC_Richfield. You can find me over at the Birb Nest. Please do remember, if you are interested in extending with us, have lots of new people in over the Christmas period as well. Don't forget about this little hack. Let me find it for you. doesn't matter if you're still a member with us or not, just go over. You can just get 20% off and just get it off your renewal. It's just for everyone for the new year. Or if you're a new joiner, you get exactly the same as well. And you can find this all over. You can find that on Crypto Birb site. You can find it on the Birb Nest site as well. And yeah, just really looking forward to taking on 2026 with you all. In truth, I think it's going to be a really interesting year. I think it's going to be a year a lot of people are going to reflect on, especially in our industry. It does feel like there's a major event happening not too far down the road in terms of the recessionary one. I'm not saying that's going to be in 2026. I really don't think it is. I think it is much better down the road, right? But it just really depends what we get presented with. So I think it's going to be a great year for trading. I think it's going to be a challenging year for trading. Ultimately, investing in yourself, investing in your future is the best piece of advice you can ever give. I know it can sound quite generic, but it really, really is. So I'd like to take the chance to just wish you all a really wonderful end to 2025 and a really, really great 2026 ahead. I hope that you're still with us on the show and in some capacity. And like I say, if there's any questions you've got about any of the material shared or anything we cover on here, just reach out. And as soon as I get the opportunity, I will get back to you. And London is actually quite sunny today. Thank you, Peugeot. It is. Sun is shining. It's nice and cold. And the husky is loving the wintry conditions, certainly a lot more so than I am. But I don't actually mind the cold. And I hope the weather is wonderful wherever you are in the world. Would love a little bit of snow, but let's see. Gordon as well. Small chance for you out there in Bedford, my friend. You might see a little tickle of the white stuff, but I hope you all have a fantastic end of year and year ahead. So Ronnie, Gordon, Tara, Peugeot, everybody that was on here. Mr. Brownbug popped in earlier as well. Didn't hear my friend, which is great to see you. Debilex as well. Cheeseburger Eddie, brilliant name. Our wonderful Jojo. Have a fantastic new year, everyone. I really look forward to seeing you at the beginning of 2026 around the